All right, good people. So I'm doing a back to back. So it's Saturday, October 18th. So appreciate you guys tuning in. If you don't already, make sure you subscribe so you get these updates. I'm going to be posting weekly. The only reason I'm doing two times this week is because I was sick last week, still trying to get back 100%, but I lost my voice, so couldn't really record anything. And I have recordings, but I don't remember what I was doing because typically when I record, I record, I record my trades, but and then I'll voice over whatever, whenever I'm, providing you guys with that info. But always, if you have a laptop, desktop, I would recommend when you first get started, record your sessions, man. Like just keep it short. But because, you only have so much of an attention span. So 10 to 15 minutes, just make sure you record it so you know what you're doing and you can like scale back to see like, hey, this lined up with this, and that's why this one worked, or maybe I jumped in too early or too late here. So, I mean, that's really how I come up with these methods. Like I record everything, and I eye certain things, and because I'm able to play back and view it in real time, it helps me to like really pinpoint um, a method, right? So what I wanted to touch base because I've been bouncing back and forth. Like I said, I talked about this yesterday, but I just want to make sure this is clear. When with the entries, so I'm giving you weekly, monthly. This doesn't mean stay at, one of these levels for a week or a month. I kind of have this here because really what you're doing, like I said, with trading period, you should be controlling your risk. Okay. The good thing about this is whatever you put in the account, you can trade. So me personally, I withdraw every other day. So I withdraw every 2 days. So I did yesterday, today would be my withdrawal. And then um the next day, I would be starting fresh. So when I withdraw the account all the way down to whatever tier that I'm taking it to. So right now, like I'm doing $30 tiers. So when I withdraw the account and start, because you don't want to have a fresh start every day, because sometimes it could be a little nerve-wracking to have too little in the account. So that's why, 2 days of build up, or just, one day of build up, and going into that second day, you trade more with confidence. But then if you have too much in there, then you're too free to trade, and then you can end up losing money because if you have, let's say, $500 in profits and you lose, even 100, you're gonna be like, man, I have 500. Well, let me just hurry up and try to get back to 500, and I'll withdraw the funds, and then you end up making emotional decisions to end up losing even more money instead of like really locking in and doing what you're supposed to do. So I do this more as a checks and balance system, and then it makes sense for me. Like I said, this is my first tier that I'm showing. I'm not showing second tier yet till I get to that level. But I mean, as you can see, just in hindsight, $40 trades, if you're doing 10 trades at just this level, 40 for four. The fifth one, you scale up just $5, that's $190. If you do the two times a day deal like me, then you can get to 400 easily just by trading $45. But the beautiful thing is, Lynn, let me explain, you're not starting off with this amount. So your first day, so realistically, your first day should be 30. So if you're gonna be like trading, if you're trying to be in this realm here, and this should be something that you should be doing when you're comfortable, you should be kind of in that 25, $30 range. Okay. Because what you want to do is, so if you're new, you're probably only doing 5 trades and cutting in and cutting out, right? But I'm just going to talk to those that have been trading and are comfortable doing 10 trades. So if you're starting off at this 25 range, for your, let's say, Monday, and you trade successfully, and I mean, like I said, you're not going to just have 10 in a row straight, but you're around 240, between 230 and 260, okay, at your 10th trade, right? So the next day, don't jump back in at the same level. No. Remember, you should have two and a half over your trade amount, right? To feel secure. So if I had 260, if I'm at 260, what I'm going to do now is start my next day at 40, and then I'll run that to the bottom, right? So now you've made 600 something, possibly, it just depends on how it all works out. But, you can make up to $660 is what I would say if this was like 10 perfect trades. Okay. And again, remember, these are all at 92% return rates. That's why the numbers are off. So 25 years, 23, 40 years, 37. So this is the mindset that you should have when you're doing this. When you're first starting off, I need you kind of in this beginning part. And like I said, if you're trying to just get used to it, it's okay. Do 5 trades, $58 here. Just know the next day you should be at 15. So don't do 58 and then go back in and do another 58. Because what happens if if you don't, I mean, if you continue to keep doing the same thing, you're not really giving yourself a chance to compound those earnings. So this is the most responsible way I could think of to compound those earnings. And if you're focusing on what you're making daily, or I'm sorry, every other day, divide it obviously to figure out what your daily is, and then that's where you can figure out, hey, if I have this amount 7 days a week, this is where I would be, or I'd be here or here, and if I do that for a month, this is where I'm at up here, somewhere in that realm. So I have this broken down so that you can see, hey, little money adds up, and then obviously as you get confident, because I mean, it's a like I said, tennis is where I would cap off if I'm at 10. But if I'm anywhere between 5 to 10, I'm fine with that. It just depends on what I have going on for the day. Okay. But when you first start, focus on at least getting five. It is okay to do that because this is still good money. Because even if you are at $58 a day and you're doing it 7 days a week, it's not life-changing money, but it's $1,006 if you just chose to stay with the same method. Now, I wouldn't do that. I would do 58, then I would jump to 20. I'm sorry, to this one to get to 75, and then I would pull like the combination of the two. And then the next couple days, I would start maybe here at the 15, and then my next day would be, here at the 20, combine those two, withdraw, and so on and so forth till you build up. So a lot of this, honestly, can be done, within a span of 2 weeks. Build that a personal account up, and then once you build it up, then I mean you could be in that next tier. But I mean, even at this level that I'm showing you here, this is $5,000. I'm sorry, this is between 5,000 and 11,000 a month from just risking $40 trades. Okay, and please understand, you're not actually risking what you're risking when you do 2 days of trade. Technically, what you're risking, let me just find a decent number, 25, right? So, two opportunities, right? So you want two and a half opportunities, so that's $50, and then you want the half. So what you're depositing would, in this case, would be, I would just do $65 is what I would do. All right. So give yourself two chances to fail, then give yourself a chance to make that money back, and then get into the swing of things. That's what I do. And then remember also, I generally cut them in half. So if I'm at 25, I'll give two, I'll do two at maybe 12 or 13 to get to my 25, just to kind of warm up. So I always do a little bit more, but I just like to start off the day. I don't like to start off the day cold turkey. So, but what I was getting at is, with this being said, if you're following in this path here, you're only risking $60. Um, but you're potentially, getting a combination of these two, right? So if you do for some reason bomb it and you don't have enough sense to stop and just take what you could take, um, you only lost $60. Like, that's what this is all about. It's about controlling the losses. Okay. So I'm gonna get into it. I think I explained this good enough. Again, just make sure you're not staying on one line there for a full week or a month. That's not what this is for. This is just to give you a breakdown, an understanding, like, hey, weekly, this number weekly gets you here. The combination of two, you can do your math and see where you would fit and see where it would fit monthly. So all that little money adds up. And then once you get to that next level where we're making, over 10 easily, like I said, life starts to change a little when you start, starting at $50. Okay. But I'm not doing that right now, for my process. So I'll get there when I get to that part of my journey. So let's do the live trades. This is another 15-minute video. I think the last one was 15 minutes or close to. Of course, I was working on the last video, so it's a lot of uh, pausing. And in this one, same. So I'll try to speed through some of the areas where I wasn't doing anything. So let's get to it. This will be a short video. All right, guys. So we're gonna go through the live trades here as usual. I'll play the video out, and like I said, we're at a continuation of where we were yesterday. So again, this is day two. Um, and yeah, you know the method. I'm just going to play through the video. I'll explain after the entry's done, and you guys will see. Now, this was, I think, about a 15-minute time frame again. So I say this because I'm, like I said, I'm not doing the math for you guys. You can figure it out on your end, but just, man, like, stop. Make sure you do this. Like, make sure you get involved with this because it really is to be able to make considerable amount of money within a 15-minute span or less. Because honestly, I was cooking and a little busy at this time, cleaning up and stuff. So it wasn't like I was locked in for a full 15 minutes. So there's no reason not to learn this. This is all free information I'm giving to you guys. So share it, like it, subscribe it, help yourself or help me help others. Um, so first entry here. So Saturdays, remember Saturdays and evenings are going to be boring. Okay. So whatever direction you're getting on these trends, just stick with it. Even if you're just to be fair, even if you want to go with the overall trend direction, because I mean, you don't even have to work in consolidated areas because at some point it does consolidate, but then it'll continue with the trend, right? So overall, we know that this is turning to a sell. Okay, remember we're on a 5-second clock candlestick, so each of these represent 5 seconds. But essentially what we're looking at here, always zones. Again, zones aren't particular points of the on the price points, they're just the area, all right, where something's being touched and tested. Okay. So for this particular one, and I'm sorry, this is not the best straight line. My expectation was for it to touch, bounce up, and come back down, which is why I did a sell. All right. And not go all the way up to the top, just come up slightly because that's how the motion works sometimes with these on these weekends. There's not a lot of strong movement in any direction. So I'm gonna play this through. I entered here. Technically speaking, if I wanted to really enter, what I would suggest if you're going to enter, allow a green candle to form. Remember, you want some of the green candles to form to show that they're flattening out. But what happened here is the price point jumped up. So I have some wiggle room from this point to where I entered. So I knew like, hey, it'll hold this for at least 25 seconds and likely go through. Um, that's why I took that as the option. So this was an example of another double up opportunity. So the double up, when you guys do the 25-second clock, you have an option to double up. It does expire, but essentially what that double up is doing, it allows you to put in an entry, a matching entry at whatever price point that you enter, and it would I use it as a way of checks and balances. So what I was expecting, I wasn't expecting it to go up and hang too long. I thought it would just really go to this blue line and retrace, for the appropriate area, of course. I was expecting it to go to that line and retrace, but it lingered a little. So once I had it on that blue line, I just clicked it there because I knew like, hey, if this doesn't go through all the way, at least I can get my money back. So in this case, it actually continued to go down like I originally wanted to. So I was able to double up on my earnings to get the two trades for one. Okay. So I like that. It's a good way of recovering from a loss. So, that's a $40 trade. I would have lost 40. I would have got 37 back. It would have been 36 some change, but whatever. $3 I would be down $3 instead of 40, right? So, I like using that. I wouldn't get too used to doing that if you're not used to doing it. But I mean, if you're doing your demo, just practice. Just understand when you're doing that, you don't want to overdo it. Like if you miss it and you miss it close, that's fine. The times where you want to do like jump in for a double would be if it's, kind of like on a top end here in this area, because there's still a chance of a reversal. If it goes beyond this, beyond your channel, I wouldn't I wouldn't get too involved with it because it may take you out. So you saw my example yesterday when I lost that quick $70, even though I got it back quickly. That can happen. So just make sure you're, not just blindly doing it. It has to be for a reason. And again, if it's closer to that line and you miss, just take the loss. I mean, you weren't wrong. You just maybe entered in too soon. Okay. But this is more so if you're like you're kind of off, but not way off. Okay. But in this case, like I said, it worked out. So we're up to, you guys keep track of it if you want to. I said this video was, like I said, 15 minutes, like of recording, but I wasn't like active the entire 15 minutes because I was doing stuff. So, um, and as you can see, the hour is 11:50. So, so when for the moments where I'm not doing anything, I'm going to make sure I fast forward through those points. So you're not just sitting here looking at a screen because I wasn't looking at it, so that would be unfair. All right, so we already entered in at the 25-second route. And as you can tell, this is going to go through. And I mean, this stuff isn't really that exciting, but that's what you want. Like, you don't want excitement because if it's jumping around doing a lot of stuff, it's going to be hard to explain exactly where you should have entered, right? So this whole concept is very easy to understand. This is probably my easiest method to get, which is kind of why I moved it to my number one. The channel rule is moved to number two. Generally, when I do number two option, I'll cut whatever I'm using in half. So if I'm at 40 right now, if I'm doing the Kettler channel strategy, I'll just cut it down to 20. So if it gets it, okay, good. If it doesn't, all right, I didn't lose a full 40, right? But here, you got downward momentum, you got zone, you got one touch, you got two touch, you got three touch, and you got four where it collapsed through, and at the top you only have one touch. Okay. Um, so clearly still downward momentum. This should be telling you that you should be focused on the sales solely. Okay. And again, with the evenings and weekends, I'm not too concerned with the oscillator being under the 20, even if it's just like snaking out at the bottom. That doesn't concern me too much because I know that just means it'll continue that direction. It just won't continue that direction in a strong, manner. Okay. So outside of that, so I showed you that zone. I don't want you guys getting in the habit of doing all these extra zones, but just understand that right here, I'm gonna do this in yellow. Right here it goes down, then it goes up. Remember, I'll be telling you like you want to enter in after it goes up and then catch it back on the way down. I was a little late, obviously, but I caught it, right, to be able to take advantage. So give it time to kind of level out some or go up a little before you just hit sell, okay? And as you can see, if you're like let's see what the chart is telling you. So the chart tells you, hey, when it touches this blue line here, it went down. When it touched this blue line here, it went down, even though this wouldn't have been a favorable time to trade. And this is the full retracement here, which is fine. But this is why you wouldn't enter in just like blindly. But if you did, I mean, you would have missed, what's this, 5, 10? Let me look at this here. So if you did, I mean, I don't know what it was doing at this time to really say, no, it was still in the buy. So you wouldn't have entered in here. You wouldn't have entered in on this one because the green is over the red. So never mind. So yeah, so this checks out good. But what you're looking at is like how far up is it going when it's going like in a downward fashion. So when it touches that blue line, it goes back down. And as you can see, when it's over it, it's probably over it for, let's just say 10 seconds since it's two green candles. So if you're doing a 25-second clock, you know you're good, right? So I'm gonna just let this continue out again, and I'll erase this distraction. So the good thing about this, man, it just takes practice. But once you got it, once you can see those zones, you're good. And ideally, the best time to do this, I would say after 12 o'clock Central, um, 9 to 11, 8 to 7 to 10 there's more so crossover opportunity. That's more of the Kettler channel, but you have to also be careful with that because you have to make sure that when you're looking at these charts that you see it prior to you jumping in it. So if you see that, hey, this one has this type of activity going on with it, then yeah, this qualifies for one that the Kettler would be involved with. But you don't want to just blindly do Like I wouldn't just do the Kettler channel on any of these because I don't see it working honestly for any of the other areas, right? So do what the chart is showing you. Like you have to adapt to what's being given to you. Don't just blindly do something because you see like, hey, it worked for this currency pair, but you know it may not work for the next one because that currency pair is doing different things. Okay, so that's why you have to be able to adapt and have those two or three different methods of trading. Really, just two is fine because I mean mostly all I use is two. I really don't have much opportunities for doing a dip. And I mean, really, this option has been working out a lot better, and maybe because it's just the later hours that I'm starting to trade. So, oh, let me fast forward because I think I was just like chilling at this point. Sorry, Saturday cleaning up, and so as you can see, oh, yeah, let's look at this one here. I'm sorry. So this, I didn't get involved with this one. I already know, because I would have noticed this. So you got a floor there. You have one large area that is just being continuously tested. You have this beauty and this beauty. Okay, that's two. And then you have strong upward energy. So if you're going to click buy, this is, I mean, you probably want them to click it a little bit earlier. Let me see here. Sorry, I was fast forwarding. I didn't even catch this. So you would have wanted to click it right there. So you're at the 1 second clock. Let me just see how this would have turned out at the 25 seconds. So you're a little bit under the blue line. Or let's just say if you even at the blue line, who cares? Let's just say that that first green candle that's touching the blue line, you're at the top. So 25 seconds. Remember, each of the clocks is 5 seconds. So 5, 10, 15. This is the 20 clock. And this is the 25 clock. So I don't know where you would have pressed the button, but regardless, you would have been over that line and you would have won. So you could have taken a short advantage of a short grab. Would I bank on anything longer than that? No, because it's still giving me sell energy. It's just flattening out. So at this point is where you want to just kind of see what's going on to see if it's going to continue to move upward and change the course of direction or if it's just kind of leveling out to continue down. So I'm going to fast forward again because again, I'm cleaning or cooking. So yeah, it chose to go back down, which is good. But now it's curving. Now it's going back up. So now it looks like it's about to change direction. So now we got strong motion. If you did the Kettler channel on this one, let me see. So if you did the early one, you would have activated already. And that would have passed. You would have been good. If you did the late one, you would have been good. Yeah. So either way, so remember Kettler channel. I showed you two different methods. The first method would have activated at the 3 second mark here. Goodness, let's find it. So the 3 second mark here, because you have a clear. Let me make sure this is stopping. Of course not. All right, I'm sorry. So it's on two. It's fine. Let's just walk you through it. So you got clear direction going upward. You got a cross here, early cross, which is fine for the early, you know, channel strategy, right? And remember, you enter in at the 3rd second, but you have that first green candle that's going from the bottom all the way through, and you include the wicks. Remember, then you got a second strong candle, a third strong candle. So you don't want to wait too long because at some point it will turn around, which is why I kind of start discussing that part with you. And if you would have clicked that, goodness, I started the video. I'm sorry. Let me redo that. Where'd it go? It's not it. There we go. So if you would have activated that at the 3rd second doing the early model, this is where you would have been. If you would have waited later, which I wouldn't recommend, but if you did it wait later, you probably wouldn't have jumped in, honestly, because remember, you shouldn't be over the channel. But if you did, I guess let's see. So this is at, I'm showing you different methods here. So that's at 205 right there. So the next 3 seconds, right there. Goodness. The next 3 seconds would be, yeah, so 205, 215. So both methods would have worked. So you're over where you would have entered at. So that's the Kettler channel. I didn't use it because, again, I wasn't paying attention. But What that was. Um, okay, there we go. Now I'm back. I'm logged back in, guys. You see me moving. So now I'm just trying to find something. So this is a good one. And I'm just adjusting my time to 24 seconds because I was trying to. So what I do, just so that you're aware, like since I'm trying to do both, you have less time on the Cutler channel. So you want to make sure if you're cycling through, if you're going to be doing both methods, go ahead and change your clock ahead of time to the 25 or to the 5 or 6 second method, and then cycle through. Because if you catch it late and you don't, yeah, if you catch it late, you may miss it. All right. So what I'm saying is if you keep your clock on 25, you're going through different charts. You have time to do this method. All right, this method is not something that's rushed. The Cutler channel is. So if you see a Cutler channel opportunity and you're trying to go in, change the clock to 5 or 6 seconds, adjust your amount, all of that, you may have already missed the opportunity. So I generally by default would keep it there if I'm going with that method. Um, but I moved back to the 25. Sorry, I'm losing my and this is my fourth one, so I don't like to mess around. If I know that it's going to hit, I'm going to go ahead and up my amount now. So let's go over this one. Sorry, still a little under the weather, guys. So we got weak candles, but they're all going consistently up, even in that little consolidated looking area. All right. I have no, I mean, I really don't have anything I don't have any real ceilings or floors that I can see. Because this is nowhere in the area. So this is just a clear continuation up. We got weak candles, but still clear direction. We're over to 80. That's fine. Like I said, I'm not nervous about that. I'm not nervous about that. And I see that it's kind of balancing out. So what I'm trying to do is make sure I'm entering in kind of at the bottom-ish of the area, not at the top. So is this one that I would recommend doing as a first trade? Probably not. Let it come back some, but this is a good one. So you see how I'm allowing it to come back some. Now I should have jumped in kind of right there to give myself more space, but it was fine because you got to make a decision quickly, and I know it was going to continue up, so I wasn't really worried about it. Just as a preference, I want to see some red candles. It's just that sometimes you're feeling yourself too much, right? So as you see, it worked out. Sorry, I'm struggling over here. Let me get back 100%, y'all. Don't judge me. Don't judge me for having a hard time breathing. So another beautiful, lazy looking one, $50. We moved it up. As you can see, this time I followed my suggestion. Clicked that, it went down a little and went back up. And so you guys see this method, like it's clear direction. Even though this is showing a cross, I want it to cross it. I want it to come down some, and then I know it's going to continue up. Because again, the time frames of when you're trading make a difference with this strategy. You can't do this stuff, or I don't know. I don't even wake up super early to trade no more. But so I can't say that you can't do it during like the normal time frames. But the time frames that I trade after 10:30, 11, um, and then obviously in the evening, that's when this really works. Okay. So I think I walked away again. Let me just speed this up to see. Yeah, I walked away after I did that. Yeah, so see how it's climbing up. So even though it's over the 80, it's continuing to climb up. That is what you can expect on the weekends. Now, and then at some point it will cut down, which it's doing now. Now, I don't know if it's going to do a sell for a long time, but if I'm going to enter in, um, like I said, I just want to make sure I'm staying with the direction of the overall trend. Okay. The overall I'm looking at, it looks like a buy, but it's looking like it's converting to a sell. So now we go in for the sell. So again, it's under that 20 and it's probably going to snake around at that 20. So that's why I entered when I did. So this is another instinctual gut instinct type of trade because it's not going to, on the weekend, like I said, you'll see, but it's not going to go up. It's not going to go down and then shoot back up all of a sudden. Like it's going to take a long time to make whatever move it's going to make. So, I think I'm at like six in a row now. I didn't get to 10 because yeah, like I said, it's already a rough day. Um, Tired, honestly. So that's tough to do. But even though this is 15 minutes, it's like I said, once you get to a certain amount, you don't have to. Like I said, it's a suggestion. 10 is tops. Doesn't mean that you have to reach the 10, but you have to make sure you're reaching the 5. Is my rule of thumb. So anything number 5, I'll take. But if I'm not feeling it, I'll stop. And I think I stopped on this one because this one was jumping around. It did work out for me, but that initial one irritated me because I actually entered in a little bit sooner than I'll show you here shortly. So when I press this button, because this thing be trying to, let's say reflex is faster now. When I entered this, I entered, uh, I entered where it was when it was showing green, and then it gave me that late. It spiked it down. So I entered at the 3 second mark. And then when maybe I didn't press it fast enough or whatever, but then it did that. So I took that as a sign that I need to stop. So this was my last trade because it should have been entered right here, and I would have felt a lot more comfortable with all this jumping up and down stuff because I knew it was going to continue down, but I didn't want to be where I was. So you got to sometimes, and again, it's just the chart is moving, so this is where I would have entered with that white line right there, and that's where it closed out. So took my wins for the day, and I stopped. So take your wins, stop. Hopefully you guys enjoy this. I'm trying to keep these short and sweet because again, this process is not hard to understand. But please, again, um, get started, man. Get started. Do the demo. If you get it down packed, start in like give yourself 3 weeks, 2 weeks. Okay, because even if you're following that model that I provided, I mean, even if you're starting at that $12 amount, you should only be putting $30 in your account. $30 in your account. If you're good enough to get down to that 10 trade marker, that's $118 when all you're risking is $30. And then the following day, you'll go to that 15, and I forgot where that number was, but you do the 10 there, like you're clearing a lot more than what you're risking. And that's the key thing. And always withdraw. So withdraw everything. I use the Bitcoin model through Cash App. So I will withdraw and then I would keep whatever I'm going to put back in there. Yeah, there's fees, so it's a waste of money, but I do that intentionally so I can make sure I stop. I don't care about a few dollars from transitioning from Bitcoin to, this here. Okay. So, pocketoptions.com or pocketoption.com is this trading platform. There are other ones. Again, Pocket Option is not regulated, so I do not recommend you stack your account up and keep money in there because with it being not regulated, if something goes wrong, you can't get your money. Okay, I haven't had that issue, but I know that is a possibility. So, like I said yesterday, if I can't get my money for it when I want it, I'd rather it be, a few $100s as opposed to several thousands. And it's really not necessary to have that because you can trade whatever you have in that account. So this method here is the most responsible way I can teach you guys to follow this. And that's what I'm doing because my end goal is to like quit job and do this 100% of the time. So I have to be able to minimize my risk because I just can't imagine that I will have success all the time. There will have to be some sort of drought period. It just has to, where I have to make some sort of adjustment. And I just want to make sure while I'm making adjustment, I'm not like, down and out, right? So, I enjoy it. I enjoy showing you guys this. Hopefully you guys enjoy it and appreciate it because putting these two videos together is something that's new to me. And shout out to the 29 subscribers. I'm trying to get to 30. I'm celebrating the little wins one by one. So stop being lazy. Y'all subscribe, log into your YouTubes, and hit that button so you get those alerts. I'll be doing the weekly updates going forward. With the not the weekly updates, but the weekly walkthroughs going forward. And until next time, guys, see you later.